Ladies and gentlemen, I don't want to say this, and I don't want this because you have an estimated 11 million people now facing eviction. And you have a jobs market that missed expectations by, it was the greatest miss on record. Okay? So, we have a huge problem. A huge problem in the country. Okay? Economically, we're heading towards an absolute catastrophe. This is a prediction that I hope is wrong. And you could say, oh, well, you thought Hillary Clinton would replace Biden. Yeah, that's true, but I also said Clinton would lose to Trump when only a handful of people were saying that. And my writing in The Hill, The Huffington Post, Salon, and other publications in 2015 and 2016, in addition to what I was saying on this channel, I was telling everybody that Clinton would lose to Trump. Now, again, I've made some predictions that didn't work out. And I hope this one doesn't work out either. I'm predicting a devastating economic collapse, at least within the stock market. An epic, horrendous, terrible stock market crash within the next year and a half, year. And I don't want that to be the case, but here are the reasons why. I'll get to the political, Biden and Democrats caused this, in my view, in my humble view. You could disagree. You can't say they caused 100% of this, obviously. But you look, ladies and gentlemen, and just really quickly, okay? Bloomberg. Here are the reasons why there's going to be an economic downturn and a stock market crash within the next year and a half, okay? The market has done extremely well the past year, but you have to ask why. Just look at how terrible things are. Below there will be an article, what caused the biggest jobs miss on record? Bloomberg. This is the increased expectations with the median forecast calling for 1 million new jobs within an unusual wide range of 700,000 to more than 2 million did not happen in a vacuum. One economic data release after another, as well as corporate observations during quarterly earnings season, pointed to a red-hot economy in which many employers are looking to hire. This is also consistent with the two other labor market indicators. The huge data miss. The Bureau of Labor Statistics reported only 266,000 new jobs, or just about a quarter of the median expectation. Could be due to three factors: a deficiency of effective demand for labor, a problem in fitting available labor supply to demand, and data issues. Okay, they missed expectations by 700,000 jobs. It's the biggest jobs miss of all time. Okay, what caused the biggest jobs miss on record? So we have inflation at a 13-year high. Prices are increasing at a faster pace than in the past 12 years. So inflation is at a 13-year high. We have the greatest jobs miss on record. And a huge issue, and what could cause, so we had banks, and we had banks in 2008 and 2009 make very risky investments, and then basically they almost went under because of these risky investments. Now you have an issue with margin debt and hedge funds. And there was a huge hedge fund that went under several months back, Archegos. That caused tremendous losses of billions of dollars for a number of investment banks. But here, this is an interesting article. How many hedge funds are a margin call away from Archegos-style implosion? So you have margin at an all-time high. So the margin, banks hedge funds and individual investors are borrowing on margin more so than ever before. Hit subscribe to this channel right now. This is devastating news, and I don't want this to be the case, and I hope that this is just, I'm just overreacting. But if you have 11 million people facing eviction, you have already a hedge fund that went under, and you have more money in hedge funds than ever before from investment banks and Wall Street firms. Hedge fund assets soared to record high amid boom in trading profits. So trading profits, like the economy's in shambles. But what's hedge fund assets jumped to $4.07 trillion. $4.07 trillion, okay, in hedge funds. And then you have $4.07 trillion in hedge funds. But you have the biggest jobs miss in history. And you have the market is being leveraged at an all-time high. Forbes, market leverage at all-time high. And then inflation is at a 13-year high. Before every major collapse, 1929, 08, 2000, you had inflation. You had high inflation. You had margins. You had firms, banks, people trading on margin more so than ever before. You might not have had the issues we have now with jobs. You might not have had the issues we have with 11 million people facing eviction. You might not have had the issues we face with $4.07 trillion in hedge funds, where these hedge funds are over-leveraged, and so are the banks that invest in them. And now you're getting JP. This is risk.net. Interesting. JP Morgan warns hedge funds to expect intraday margin calls. So when you borrow to invest, it's called you're investing on margin. You're just borrowing money to invest. When your stock or when your investment goes down, you have to pay up, and you have to pay. You have to pay the investment firm that you borrowed from. So, and you need to do that, or else you lose your position. You lose all your money if you don't do that. Okay. And you could buy more than what you put in, like twice as much. So JP Morgan warns hedge funds to expect intraday margin call. A margin call is when you have to pay a certain percentage of the money that you owe because the stock has tanked. The U.S. bank may demand variation margin up to 7 times a day after Archegos default. 7 times a day. JP Morgan is warning hedge fund clients that it will demand they post more cash at any time during the day if their trades lose value. The biggest U.S. banks buy assets called clients of its prime brokerage division in the aftermath of the collapse of Archegos Capital Management, according to 3 people familiar with it. JP Morgan told hedge funds and family offices they would have to post more collateral on their single-name equity swap positions if they lost value intraday. Okay, that's bad. That's horrible. I mean, that is... It's bad because you have trillions, you have more money invested in hedge funds than ever before. You have more people or more banks and institutions borrowing than ever before to invest in hedge funds and other investments. So if you have more money in hedge funds and you have more money on margin than ever before, and you have a high in inflation, 13-year high in inflation, you've missed the jobs, you've missed jobs expectations jobs forecast by like 700,000 jobs. Then you have 11 million people who could face eviction. And then we'll get to the politics behind this. Democrats care about, like, you know, their lives focus. The only thing they care about is pandemic-related protocols. That's it. They don't care about economic growth at all. And Biden, the infrastructure bill, has nothing to do with economic growth. If you look at, like, the Wharton School of Business says that it's actually going to decrease GDP. Then you have the GDP estimates being decreased. Okay? Substantially. So economic growth has been revised downwards. All Democrats care about in the House, the Senate, and the executive, the presidency, and all the media cares about is still the pandemic. They haven't thought beyond this. And they're actually stifling the economy because of their hysteria and paranoia that is endless. Do you understand? It's endless. It is endless. So when the stock market collapses, it's going to affect the entire country. The stock market is at a high right now. You could look at the charts, the NYSE and the NASDAQ, and you can look. It's done extremely well the past year, but nobody knows why. The economy is, like I explained, from inflation to jobs to even to the fact that we're over-leveraged, or the stock market is running on investments that are where margin is at an all-time high. Why is the stock market so high right now? What justifies this? The economy isn't growing as fast as we thought it would grow. So what is justifying this? And you already had a hedge fund that went under several months back. If more hedge funds go under, you're going to have, and then so you can't reduce interest rates any lower than they are, because interest rates are extremely, extremely low. You can't go any lower. So then what are you going to do when nobody can get a loan in a country that has already tanked its economy because of a hysterical and paranoid reaction to something that should have been, a thoughtful, we deliberately tanked our economy because Democratic states especially, and Democrats in media, said that we needed to prevent every person from working to save them. That's essentially what took place. And these draconian policies did not lead to the intended results. In fact, they led to economic devastation. So, I don't know, if you look at what Democrats care about, and numbers, U.S. corporate profits fell 13.9% in the first quarter. So corporate profits are falling. Why is... No, sorry, I'm reading something else. Corporate profits... global corporate profits fall 8%. Okay, but anyway, so corporate profits were hitting record highs, but earnings expectations may still be too low. So the corporations were doing okay in terms of their profits, but everything else is buckling under the pressure of horrendous policies and margin investing that's at an all-time high, and hedge funds that could go under, where there are, it's over $4 trillion in investments, and the jobs report that doesn't seem... So you have corporate profits that propelled this stock market boom, but every other indicator or every other, like everywhere else you look in the economy, and especially the political, the political blind spot that we have. Democrats are not focused on economic growth. Trump wanted to open up the economy last May. Democrats said, no, all you got from media was, no, you can't open up the economy, Well, now, if the stock market crashes, it's going to negatively impact the economy even further. People are not going to be able to get loans. Businesses are not going to be able to get loans because banks are might possibly be at risk of going under. Then we'll have to bail them out again. And then Bernie Sanders and AOC will complain again because they were silent when Democrats were deliberately tanking the economy. This was like a self-fulfilling prophecy. We're going to have a horrendous economic crash, Wall Street crash, and it'll be the fault of Democrats who gleefully tanked the economy to save people, while at the same time ignoring that when you cause economic devastation, eventually it's going to catch up in the form of a stock market crash that further compounds the economic disaster. Give me your thoughts below. I mean, I hope I'm wrong. But this is not good. There's nothing good here. And we have, you saw the Afghanistan catastrophe. We still have Americans left in Afghanistan. You saw this catastrophe. The Biden mashed potato brains and his merry band of highly polished, highly educated imbeciles don't know what they're doing. And so they're completely clueless. We're heading towards a stock market crash, and all they care about is like climate core. They're like, I was reading about this during the live stream. They're gonna, this climate core is gonna, build trails and restore streams. It's like we're heading towards a financial catastrophe, an absolute catastrophe. So then, what happens? The banks are gonna have to bail out the banks, but debt, the national debt's gonna increase even further, and we've been pressing our luck with stimulus checks. We have to give stimulus checks, but if you prevent people from working, you cause inflation, and you cause all of these problems. And you cause jobs numbers not to work out because millions upon millions of people, and this is what Biden and Democrats and AOC and Bernie don't understand, millions of people lost the jobs that they've had for years. So there are a lot of job openings, but they're not the openings. Great many people can't get their jobs back. What the jobs are qualified for. And you're making it more difficult with pandemic-related obsessions and protocols. We won't even get into that. I mean, Biden and Democrats are focusing on anything but economic growth and foreign policy success. Anything but. It's the worst administration of all time. I'm telling you, he rivals Bush and Jimmy Carter. He rivals Bush and Herbert Hoover. This man is already one of the worst presidents, if not the worst president we've ever had. I think George W. Bush was the worst president we've ever had. But you could say Bush, Herbert Hoover, Jimmy Carter. Jimmy Carter single-handedly catapulted Republicans to 12 years in the White House. So, but anyway, give me your thoughts below. I hope I'm wrong. We have 11 million people facing eviction, inflation at an all-time high, margin trading at an all-time high, investment in hedge funds at an all-time high, and we just had a hedge fund collapse. Stock market is at a record high. What do you think's going to happen when the stock market goes down? All of the margin calls that these hedge funds and these banks don't want to, because banks have to answer the margin calls also, not just the hedge funds. This could be an absolute catastrophe. This could be an absolute catastrophe of epic biblical proportions. Give me your thoughts below. Have a wonderful day. Have a nice day. Just like Spaceballs. Anyway, give me your thoughts below. Hit subscribe right now. Thank you so very, very much.